Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. Super exciting week. We had a gap up. I did not expect this at all. I thought that we were going to hit the 200-day moving average and come right back down. That would have timed in perfectly with a retracement on the Fibonacci extension. That didn't happen. I think what we saw happens maybe 20-25% of the time. So that was kind of an anomaly. Now, where do we go from here? Are we going to get an island reversal? Meaning, is this going to go up and come back down? Is it going to look something like this and then go back down like that? Let's take a look here. Okay, so I drew a couple of levels here as far as support. So if we do start to come back down, I see this first one as having like a major bit of support, which is at 5,775 or thereabouts, plus or minus 50, right? Right around there, we have a big gap. We've got some back support right around here. After that, the major support level is going to be 5,550. And then as far as resistance, up top side, we've got about 6,000, and then the all-time high of like 61, what's the official number? 6147, okay? So that's your resistance to the upside, support levels here to the downside, and you can even see the reinforcement of these support levels if I run a Fibonacci retracement, and we will just take it from the bottom to the top here. You can see that this 5550 lines up almost perfectly with the 38.6% retracement. And then if we run an extension here, so we'll go to Fibonacci extension, we'll take it from the low to this recent high in here and see how we blew past this 100% retracement. And the next one up here, the 1618, lines up almost perfectly with the all-time highs. So, a lot of resistance right there. I think that probably goes without saying. And then this next one here is we're going to run it from this next run up and then up to here and then down a little bit and hit it right there. And we're hitting right now at the 618, and then the 100% retracement is right around the all-time high. So kind of multiple confluences of support right there. This yellow line also coincides pretty nicely with the 50-day moving average. If this were to come around and come back down to the red line, that would line up almost perfectly with the 200 moving average by the time it got there. So this is kind of a tough one. I would say, banana to my head, is this going up or down next week? I would probably say it's probably going to go up slightly and then have a little reversal. I think that I still don't think we're going to hit all-time highs, although I'm much less certain than I was a couple of weeks ago. A couple of weeks ago, I was like, no, not happening. Now I'm not so sure. But my bias is still that we're not going to hit all-time highs, that we will reverse over, and then this will be our first level of support. That'll be our second one afterwards, and then we're on our way down. So that's where I see the S&P 500. That was an exciting one for the week. Don't hear me say that very often. Dow Jones Industrial Average. Oh, by the way, the S&P was up 5.3%. Dow Jones Industrial Average was up 3.4%. I think we still might have a tiny bit more upside. Not a whole heck of a lot to catch it right here, but maybe a tiny bit more upside before we get a rollover. And the Dow Jones divided by gold. Dow Jones outperformed by 8.5% this week, so that's still, it's kind of playing in what we thought. I still think it's probably going to go up. I think gold will probably continue to go down a little bit, and this will continue to go up just a little bit, which means this chart will continue to go up. And the dollar is up 0.6% for the week. So I think we still got a little room, although it's just getting caught right around this 101, 102 level. It's kind of being a little stubborn right there. It's being a little stubborn. Yeah, I think next week it's probably going to go up. And if you like what you're seeing so far, check out this. Okay, so the bull flag is playing out here in the 10-year Treasury. I think 5% is basically our upside target on this one. Immediate resistance is going to be around the 475 to 48, somewhere 4.75 to 4.8. And then after that, I think we're probably going up to 5. Moody's downgraded U.S. debt for the first time in, I think, their history. So we've got 3 credit rating agencies, right? We got Standard & Poor's, S&Ps. They downgraded in 2011. So they went from AAA to AA plus. And then Fitch did it in 2003. And now Moody's did it last week, I think on Wednesday or Thursday. So I'm kind of thinking 5% treasuries, 10-year treasuries, here we come. Yeah, we'll see. It is a debt-based monetary system, like all of them. So they have to keep printing to keep the ball rolling. I have been seeing some things through the ethos on, is the Fed doing stealth QE? And let me share my screen here. We got a story out of Morningstar. Why is the Fed quietly buying bonds in billions? Buying billions in bonds and hoping nobody notices. So we got that side. And then we also have here from Lance Roberts on RIA Investments, Real Investment Advice. And he's saying basically that kind of the opposite. So, you know, this like stealth QE is patently false. So I don't know what the hell to believe. I really don't. If you know, there's 14,000 of you and there's one of me. Put down in the comments below if you think that the Fed is doing stealth QE or if they're not. Unless I completely misunderstand this, the Fed's balance sheet, the central bank balance sheet should be going up. We should be seeing this if they're doing stealth QE, and we should have the M2 money supply going up, which it is. But it's my understanding that both of these should be going up if they're doing QE. Maybe that's why they call it stealth QE, is because it doesn't show up here. I don't know. I'm not sure. And be sure to check out our free newsletter. As the name would suggest, it's free. There's no spam. I'm not going to sell you your email or anything to some marketing company. It's just you and me, one email once a week, down and dirty. Comes out at 10 a.m. Pacific time every Sunday. It's a summary of all the guests we have every week and this weekend show. So it's a one-stop shop for the plan for next week and all the links for our future guests and where you submit your questions. So link will be in the pinned comment below, or just go to stevebartonmoney.com and you can sign up there. Also, next week we have John Pallamy and Justin Hune. So be sure to get your questions in for those guys. Super excited for both of them, and I'm excited to pick Justin's brain on uranium, because that man has forgotten more about U308 than we will ever know. All right, the 10-year Treasury minus the 2-year Treasury, the 10-year yield minus the 2-year yield. I got a question last week, I'm sorry, I don't remember who, on why we keep track of this, and this is why. So if I were to put like some bars in here, you would see that whenever short duration debt, which is below this white line, pays more than long duration debt, after we exit that, which is what we call that time is upside down clown world, then we move into a recession. And this up here is normal times, because long duration debt, if you give your money to the government for 10 years, it should pay more than giving it to them for 2 years, right? That makes sense. It doesn't make sense when it's down here. So that means that traders see that a recession is coming, so they want to get a higher yield on their short duration debt. And then as soon as they see we're going into a recession, they're like, okay, now we're going back into the way it should be. I'll put my money into long-term bonds, and boom, we move into a recession. So this is a pretty fail-safe indicator, the 10s and the 2s. And you can see whenever we get below this white line, shortly after that, boom, we go into a recession. Right here, we had for a hot minute, we were in a recession, I guess a technical one. And then now this one has been pretty incredible, right? We've been down below this zero line. It was down below there for over 2 years, right? Like, how bad is the recession going to be when we come out of this thing? I think it's going to be pretty radical. And I think precious metals are going to absolutely kill it. And is one of our base cases for being invested in it. So anyways, that's why I bring up this chart every time. I kind of expect us to look back on this a year or two from now, and for our government and the Fed to acknowledge that, yeah, you were in a recession, in the middle of 2025. But we'll see. Time will tell. We can't see the future. All right, and 1-month Treasury. So this is essentially cash, is paying you 4.3%. And And you may say, Steve, I got my money in Wells Fargo and they're not paying me 4.3%. No, they're taking the cash that you have in there and they're paying themselves 4.3% and they're giving you nothing for it. So if you could put your money in a brokerage account or anywhere else that will pay you this 4.3, I think you will be better for it. And the LQD, so longtime listeners will know about this put, and David, who taught us about it. I'm waiting for this to get up to be a little bit more, maybe in like the 108 range. It's looking to me like this is probably going to go up next week, and then I'm going to try to fire and get another put on this. And this is basically just a hedge for the rest of your portfolio. If we have another like Charlie 19er event like we did back here in February and March of 2020, then this thing is going to pay quite handsomely. All right, and the Canadian dollar divided by the US dollar, I'm sorry, the other way around, the US dollar divided by the Canadian dollar. So when you see this chart go up, the US dollar is outperforming the Canadian dollar. And so for you Canadians that are storing some cash in your brokerage accounts and you have to decide, do I want to store this in Canadian dollars or do I want to do it in USD? I'm leaning towards USD right here. We do have a little bit of resistance here on the 200-day moving average, but I think over, a little bit medium term, I think the US dollar should outperform the Canadian dollar. And this one came across my radar, which is kind of interesting. This is the Japanese 40-year bond yield. So they got 40-year bonds out in Japan, and this thing just spiked up recently in the last couple of weeks. So this week it was up 1.5% change, and last week it changed by 6.2%. So this thing's starting to spike pretty high. So just one thing to keep in mind, basically that means that people don't trust the Japanese government as much as they used to, so they need to get paid more for it. Alrighty, and we got a comment here, Lost in Gear. He says, great job, Steve, thank you. Would you be able to do a video explaining your tools like RSI, and he's talking about all these indicators and stuff. Yes, it is in the works. It is almost completely filmed. I just got to do one more video, basically a video of how I set up TradingView here so that you guys can point and click along with it, and then it'll be good to go. So stay tuned for that. I've got it. I uploaded it to a site called Gumroad, which is basically a platform where you can download the videos. I think I'm going to charge, it won't be too expensive, but yeah, I'm pretty excited about it. I think that'll kind of put everyone on the same. I think it'll help a lot of people. Then when I, throw out some of these terms and, RSI and MACD, you guys will be like, oh yeah, I know exactly what that is, right? Okay. Anyways, gold is down 4.7% for the week. So pretty exciting here. It's correcting just like we thought it would. Had a little blip there week before last, but then it's finally coming back down. Actually caught right here on the 50-day moving average. So what's pretty exciting about this, if we zoom in here, one of the other guys was saying, I can't remember who, if I could zoom in a little bit more, you guys could see this a little better, and it got like 9 thumbs up. So I'll try to remember to do that for you guys. Okay, so we see this bar right here on Thursday, shot down, hit the 50-day moving average, and then shot up. That's a pretty bullish looking bar right there. I placed a couple bets, which I'll show you here shortly. I remember to redraw in these boxes here. So this yellow one, I feel fairly confident that it'll get down here. And then this green box down here, I feel like, somewhere between 27.50 and 28.50. Maybe it gets down there around, I don't know, maybe 30% of the time, somewhere around there. But I think most of the time we get to hit this yellow box right here. So if you don't have any gold yet, like maybe you buy some now, and then, but kind of wait to buy like a decent amount until it gets down to this yellow bar down here. Now, another thing, we have some long-term trend lines drawn right here. This one's not too long-term. I mean, it goes back about a year, but it's pretty reliable. I mean, if you look down from there, okay, so 1 point, we'll call that 1 point there, 2, 3, 4, 5, 6, 7, right? Quite a bit of support there. Okay, now we also have this yellow line coming up right here. This is the 200-day moving average. And we've got this long-term white one right here that goes back. I'll zoom out here so you guys can see it. This goes all the way back to 2016. Got this one from Michael Oliver, and I saw it from another TA. I can't remember who. Anyways, you got a lot of confluence of support around there. I'm of the mind that the 50-day moving average probably is not going to hold. I think we got a little bit more selling off to do, especially if bonds are going to be moving up like I think they will. If people can put their money into something that's going to pay them 5%, then why pay for a yellow pet metal, right? Or pet rock. If I had to guess, banana to my head, I think that this goes something like this, somewhere in that range, and then we move off again to like all-time highs. Like if that would be my guess. I think this is going to be a lot of support by the time that we get there. The 200 moving average will probably be pulling across somewhere in that range. I think that would actually be best for us as gold investors, because it would give us more chance to get in and more time, and it would make the eventual liftoff even higher. If we just shot off to the moon right here, I don't think we would get up to like the 6,000 targets and stuff like that. You know what I mean? I think we'd probably, we might peter out at around 4,000. But if we have time for this to consolidate, or maybe even do something like super bullish, like, build out some type of like cup pattern or something, you know what I mean? Like, I think the best thing that could happen for us as gold investors right now is for this to basically consolidate sideways to down, and before the next leg up, which I think is inevitable, and I think it's coming. But I think we're going to have better chances to get into gold as the time comes up. You may not. So if you don't have anything in gold and you're new to the show, welcome. I think now is a great time to be rotating out of general equities, out of the S&P, out of the Mag 7, ones like that, and putting some money to work in some of these gold stocks. All right, and gold divided by the S&P 500. Okay, so correcting down even more. Gold underperformed the S&P 500 by 9.5%. This probably continues down. We do have a decent amount of support at 0.52. So this 50% mark is basically takes 2 ounces of gold to buy 1 ounce or 1 share of the S&P 500. And CEF, so a lot of new listeners to the show, welcome. This is where you start. So this is a physical gold and silver position on the stock market, courtesy of Sprott. And levels here, the way you read this is the red line is your entry, your first entry position. Then yellow is you buy even more because the deal got better. And green is it's probably not going to get there. I try to put the green lines as stink bids, as like I think there's probably a 15% chance that it'll get down there. So I don't expect it to get down there, but if it did, it would be a real deal. Okay. All right, so first one got hit basically at $28. I mean, I think it got within a penny of that. Yeah, the low was 28.01. So if you had your limit order for 28, you know what? When the market opens up on Monday, assuming this didn't jump up to like 29 or something, you're fine buying it now. You're close enough. I just do these on even numbers, so it's easy for you guys. Okay, and PHYS, same deal. Correcting back down 4.3%, down 4.3%. I like this limit order right here at $24. We can say it essentially hit. It hit right there on the 50-day moving average, just like gold did. Shocking. And GDX down 8% for the week. So we're past the point of concern on this one just because we've been in it for so long. Now we're looking for more entries into it, right? So we sold way up here at 52. I really like this 44 level, and I like this 41.50 even more. I think that for it to get down here to 36, it's probably not going to happen. Like I said, green lines are probably 15% chance, right? But this 41.50, I think we probably hit that half the time, right? This 44, probably going to hit, so if you're new in here and you want some gold miners, this is a real easy way to play it, okay? And GDXJ down even more, 8.7%, down 8.7, and hit right on the 50-day moving average right there. I like this $51 level here a lot. But did start your position here last week. If you had your limit order at 58, congratulations, you're in. And this just emphasizes. So last week, gold was up 3% or something, and GDX was up 7%, and GDXJ was up 9%. Now, gold is down 4.7%, and GDX is down 8%, and GDXJ is down almost 9%. Okay, so these are very leveraged plays to the metal itself. And why you really want to be right when you're betting these things, if gold's going down, you do not want to put your money in these things because this is going to lose you money even faster. All right, and Franco, Nevada is down 5.9% for the week. So this bull flag right here we drew last week did not play out. It broke down to the downside. Usually if you got good bull and bear flags drawn, I find that they tend to be accurate. I'll say 60 to 70% of the time. I mean, it's like way more than half, right? But this is one where it did not work out. You know, I mean, I think hit it pretty well. I mean, you had increasing volume, then decreasing volume. The histogram down here looks pretty good, but it just dropped out of the sky and didn't play out. So first buy level 150, then 135, then 125. And Gold Royalty Corporation down 7.4% for the week. Still like an entry point at 144, and then one even better at $1.25. And Origin Royalties just still seems to be grinding sideways, waiting on what's going on with triple flag precious metals. I don't really like any buys right now. I don't like any sells either. I moved past the point of concern. I've been in this thing since it was 45 cents, and once it got up to my target price of 130, then or 133, I sold at 134. So now I own this thing for free, which is a nice place to be. I'm a poet, and I didn't even know it. I don't really see any discernible patterns here, and I don't think we're going to have any for a while because, basically just got a re-rating. We got to wait for triple flag to, for the deal to go through and for more time to iron out here. But if there is any significant pullbacks in this and no change in news, I'll be buying more. All right, and Barrick Gold is down 8.4% for the week. So coming into our first buy zone here, so they changed their ticker. It's no longer GOLD. It's and it's no longer Barrick Gold anymore. I got to quit saying that. It's now Barrick Mining Corporation. So I guess Bristow wanted to, seem like he's, I don't know what the word is, they're not doing just gold, they're into copper and stuff too, and whatever. Anyhow, first buy zone, 1775, that hit on Wednesday, Thursday, and Friday. So if you had that limit order in, if it didn't hit, you should check your brokerage account because something went wrong. After that, I like 1625 and then 1525. And Newmont is down 7.2% for a week. Another bull flag that did not play out. Another thing, when you're looking at these and you're trying to figure out which way the miners are going to go, start with the commodity itself. And if the commodity itself is going down, then the leverage play like these miners, they're going to do the same thing, right? So this bull flag did not play out. We can delete that as well. But looking for another entry position. So if you want into Newmont, I think now is okay for a starter position. I wrote this level at 48.25, and that hit on Wednesday. Oh, no, it didn't. It missed it by 2 cents. Huh. Okay. So if you had 48.25, you missed it by 2 cents. Anyways, I wouldn't buy it now. It's up at $50, but maybe drag it down just a little bit closer to this 200-day moving average, which right now is at 47.35. Okay, then after that, 42 and then 37. And Darren says, I think the gold stocks are experiencing some FOMO right now. As soon as the correction makes a lower low, the FOMO crowd will bail and chase the next hot thing. He says, P.S. I think 42 on Newmont is a pipe dream too. Yeah, so this 42 probably isn't going to hit. I should probably move this up actually. 44 or 45 is probably a better level for this. And then I'll keep the stink bid right around there, maybe catch that gap around 38, 39 for Newmont. I'll have to go back a little bit. Yeah, I like that level, $39. And then let's move the yellow one up. See, all I'm doing, I'm just looking at price action right along right here, right? Probably 43.50, somewhere in that ballpark. And then I'll move this down slightly, just a little bit to like 47.50, somewhere in that range. Okay? And Agnico Eagle is down 9.3% for the week. So getting closer and closer to our first entry point here for Agnico Eagle, $100, then 89, then 78. And we want to wait for these technicals to reverse though. See, if we look at RSI here, it's at 41. We still need it to come down. There's no indication that this thing's going to reverse and come back up. Same with MACD. And B2 Gold down 6.1% for the week. So I took an option on this, and I typically do not buy at least a call or shares straight up. to go to the upside when we have technicals looking like this. So see how the MACD is kind of in the middle of the road. RSI is middle of the road. It's at 45. Doesn't really look like it's going to turn up. I mean, at the moment I bought it on Thursday, it did, because this is what the gold chart looked like. We had that reversal bar. Remember, we didn't have this information over here. And then over here on B2, we had a nice reversal bar that hit perfectly on that 200-day moving average and shot up with the 400 underneath it. The duration and strike price I took, where is it? There it is. $2.50 strike price, so it's in the money, right? Because the stock price is almost $3, and it expires January 17th, 2027. So we have a lot of time on this thing. And basically my plan on this is if it goes back up to the white line, then I'm going to sell it. That's pretty much it. But we had a confluence of things in here. We had a Fibonacci reversal, Fibonacci retracement down to the 618 on the 200-day moving average with a reversal, with basically a bullish hammer going up. And anyway, we'll see how it works out. And Equinox Gold is down 7.3% for the week. I got a little bit more of this, so it hit the first red line here. Now, I've already got a decent amount of this, but my basic game plan is, as the gold bull market continues, I'm going to be selling out of the big companies and going into some of the smaller ones, and this is a mid-tier. So this kind of goes in line with selling a little Barrick, selling a little Newmont, selling a little Agnico Eagle, and then buying up some Equinox here. I think this company is going to do really, really well. Hit right on the 200-day moving average, had a nice little reversal bar on the day I bought it, and the next day it went down. So first level of support right there. I like the next one at $5.60, the one after that at $5. And G Mining Ventures is down 9.7% for the week. So hit the red line. So if you guys have been waiting to get into this thing, you got it, $13. Congratulations. Next level, 11, and after that, $9.50. And Rio 2 is down 10.7% for the week. So I moved up our lines here. I basically moved each one up and deleted the yellow one down here, or the stink bid green one down here at like 39 cents. I think that's just not realistic. Anyhow, looks like it's going to come down and hit the 68-cent one right there. I like that as a starter position. And then 57 cents as another one. And then a 48 cents as back up the truck. And Podcast says, thanks, Steve. Best show on YouTube. And Metal Bull says, agree. Best market review. But I'm biased because I like commodities, so that helps. And then he says, let's go silver. All righty, sir. Let's go silver. Thank you guys for the comments. I like it. Remember, I'm just standing here in an empty room talking to a camera, so it's nice to hear some feedback. I like it. Thank you. Okay, silver is down 1.7% for the week. Kind of consolidating sideways here. We're above the 200-day moving average, so that looks good. Someone was asking if this is a bull flag, and wow, that jumped. Why did it do that? Makes me look like I don't know how to draw. There we go. Look at that. Oh, bull flag, bull flag. I'm not super stoked on this. I mean, okay, so we do have increasing volume, right? And we got slightly decreasing volume as it's going out, but I really don't like this histogram right down here. See this part? And I'll go over this in a lot more detail, when I come out with the video series on technical analysis. But I'd rather see how deep this got right here. I'd rather see like a little bit more red histogram down here. That would make me a little more convinced that this is a bull flag. So, if this is a bullish flag, then, I don't think you're 60 or 70% on this to go to the upside. I think it's like pocket aces versus like pocket queens versus ace king, like 53-47 or something. You know what I mean? Not that great. So anyways, I like more here. We see the rising 200-day moving average. As long as it stays above that, I like it a lot. And gold divided by silver is, let's see, gold underperformed silver by 3%. Last week, it took 105.5 ounces of silver to buy 1 ounce of gold. Now it takes 98.5 to buy 1 ounce of gold. Kind of bullish looking pattern here. I don't know. If I had to guess, I would say this is moving up next week. And PSLV down about the same amount of silver. This is physical silver on the stock market, is down 1.5%. Yeah, sideways to down, is coming into a Fibonacci right here. So we do have a bit of a retracement right on the 38.2% retracement. I'd be paying more attention to this rising 200-day moving average. First limit order I see is at $10.50, then $10, then $9.50. And SIL down 7.4% for the week. Got a rising 200-day moving average. That's great. But I still don't see any buys right now. If we run a retracement here, where's my little retracement tool? There we go. We'll take it from the bottom to the top. We're right in the 38. You know, it's kind of hovering around there. But although now that I'm looking at this, this does have a pretty clean double bottom. But I'd be paying attention to silver more than I would to this one. And SILJ, same kind of pattern, down 6.3% for the week. Coming right into that possible double bottom right here. We do have a golden cross that just happened this week, so that is bullish looking. Let's see. Let's just do some S's and giggles here. Okay, so if we ran an extension on this, let's say this is the bottom, and it hit down at the 50% retracement. You could have an upside here up to almost $15. So if you don't have any SILJ and you want a little leverage here on the miners, if you think silver is going to go up, I think this is one of the better ways to play it, you know, just for most investors. Another really nice way to play it, and one I did on Friday, Pan American Silver down 16.4%. So we got some nice news here. They're going to be buying Mag Silver, or it looks like the deal's going to go through. So I like this deal, you know, and I placed a bet on it. I already got a bunch of Pan American Silver way up on it. You know, it's tough for me to buy again when the stock price has run up so much from where I originally got it, but this is one of those that I did. This was more of a fundamental bet for me than it was a technical one, because I bought it underneath the 200-day moving average, although it is rising, so that's good. But I did have this yellow line drawn before, so at $22.50. So if you had your limit order in, congratulations, it hit. But basically, we want to buy on the bottom end of this parallel channel, pretty darn close to it. If it got down here to like 21.50 or something, you know, another dollar down or something, you'd be hitting it pretty well. But yeah, if you don't have any exposure to silver, I like this one a lot, and SILJ. And let's see. Jonathan says, great show, Steve. Thank you for the analysis and the teaching you provide. The 3 levels of buying and stink bidding are genius. Thank you. So he's talking about, you know, the red, yellow, and green lines. I don't think I saw that anywhere. I think this is my idea, although maybe I picked it up from somewhere. I'm not sure. Was there a class in the Rule Classroom that taught you how to trade short-term natural resource stocks? No. About, I don't know, 6 or 8 years ago, I took a weekend class on options, and that kind of put the bug in my head, like, oh my God, you can read charts and then know when to buy and sell. And then since then, I put in about 10,000 hours since that 10-hour weekend class and studied. So that reminds me, I've had some people ask me about this. Maybe put it in the comments below. If you guys would like to see like real-time alerts, you know, as like a paid service, we got the free newsletter. But if it was like a real-time service, like, hey guys, you know, it's 10:30 in the morning right now. I'm buying Pan American Silver because of this, and this is what I see on the charts. If that would be of value to you guys, let me know. If there's enough interest, I can start a service like that. But it would be a lot of work on my end, and I wouldn't do it without compensation. So let me know in the comments below. So thank you for the comment, Jonathan. I appreciate it. And copper, paging Dr. Copper is down 1.3% for the week. So kind of sounding like a broken record here the last few weeks on copper is basically I see weakness in the copper price, and it just keeps on just kind of slowly chugging down each week. You know, got decent support right here on the 200-day moving average, which right now is at $4.41. You know, and then got quite a bit of support on this upward channel trend line. You know, if it dropped down there tomorrow, then it would be at like $4.25. And gold divided by copper. Last week, it took 718 pounds of copper to buy 1 ounce of gold. Now it takes only 693 pounds to buy 1 ounce of gold. So gold underperformed copper by 3.5%. And COP.U is down 2.8% for the week. So I like any buys, $7 and below. And COPX is up 0.9% for the week. So basically just buy on pullbacks. First limit order 36, then 32.50, and then $29. And COPJ is down 3.7% for the week. So kind of worked out perfectly with these last limit orders. I still like the same levels. If I had to put a red line in there, I'll put one in right now for you guys. Let's do 1850. I think that looks pretty good. 1850, and see, this is how we do it. We right click, hit settings, coordinates, 1850 style. We will make it red. Bam, and it's done. Freeport McMoran is up 0.4%. So for the regulars, your limit orders hit a few weeks ago. For the newbies, these are the lines to pay attention to. $34, then $26.60, and then $19 as a stink bid for the biggest copper miner on the planet. For a very leveraged play to copper, this would be it. Munduro Capital is exactly flat for the week. Closed the week at 14 cents, just right where it opened. Super low volume, limit orders only. You can see like right there, this thing's trading for 14 cents, and there's days where this thing will only have 1,000, 2,000 shares traded. And uranium is up 1.8% for the week. So basically sideways, but it's good to see it in the $70 range. And gold divided by uranium. So gold is starting to, gold underperformed uranium this week. So that's good for uranium investors. By 6.4%. So last week it took 47.6 pounds of uranium to get 1 ounce of gold, and now it takes 44.5 pounds of uranium to get 1 ounce of gold. So basically chart go down, uranium go up. And SRUUF is the Sprott Physical Uranium Trust, is up 0.6% for the week. So we drew this parallel channel a while ago, and it seems to be pretty well obeyed. And we just got up to the upper part of that. So basically hit the 200 moving average, or got pretty close to it and started to roll over. So I see a little bit of correction here coming. Still at 66.2 million pounds. It's at about a 10% discount right now. So I think it'll get cheaper. I think you can hold off on that. And Cameco is up 1.1% for the week. So last week I said it's kind of getting ahead of its skis here, ready for a little relief, and it just hit up and then started to roll over. So I think we're going to get a little bit of consolidation here. And if you guys, I know a lot of you guys are just like, putting in these limit orders, right, where we got these lines drawn, and for everyone that picked it up at like 36, which is a lot of you, at this moment you're up over 40%. I mean, this was April 8th, and we're, 5 weeks later. Like, how many people do you know? Do you think your average investor just made 40% in 5 weeks? The answer is no. Okay? So, I'm not a financial advisor. That goes without saying. Read all the disclaimers, but man, that sometimes you got to pay yourself. You know what I mean? Look at the RSI starting to roll over. You know what I mean? Look at the MACD just starting to roll over. You know what I mean? Like, if you're not a trader and you're just in this thing for the long term, then, go for it. But, imagine how you felt and how tough it was to pull the trigger down here at $36, and now you're sitting at 51. I'm just saying. It's like that little I don't know emoji, that one. All right, URNM is down 3.5% for the week. So I took a little bit of profits here. I sold 20%. My plan was to go up here to the 200-day moving average, but I could tell by the chart pattern that it was going to roll over, and so far we're looking kind of smart on Friday. We'll look pretty stupid on Monday if it just rockets up through it. But either way, took a little profits in URNM, and URNJ is down 8.1% for the week. So I wasn't quite as quick on the trigger on this one, but I wasn't up nearly as much either. So watch your limit orders. I like a limit order down here at 1367, and there is a reason for that. It hit perfectly on that number twice, or I think within a penny. And then stink bid down here at 1152. And UROI, Uranium Royalty Corporation, is performing nicely. This one is down 3.6% for the week. So first limit order at 175 and then $1.50. And Uranium Energy Corporation down 7.2% for the week. Sold a little bit here, sold 25% of the position. Again, my plan was to go up here to $6.50, but anyways, it looked to me like the pattern was going to go down, and so far I've been right. Yeah, I think generally speaking, the stock market's going to start to roll over, and like Christopher Mullen was saying, once the S&P rolls over, then these uranium equities are going to get hit as well. Okay, and we have the Rule Symposium is coming up. Again, I'm looking forward to it. I've already got my room booked, got my plane tickets. I'm set. You can stay at the Boca Raton, but you don't have to. I mean, some people get an Airbnb, but I think staying at the hotel is well worth it. If you use the link down below, you can book it for less than half the normal cost, so super cheap. You get sponsored complimentary breakfast and lunch every day, which is delicious, by the way. I mean, it's like omelets and steaks. It's not muffins and sandwiches, okay? I mean, it's like really, really good food. And on top of that, when you go to the breakfast and lunches, these are the companies that are at the symposium that are putting on these breakfasts and lunches, right? So while you're sitting there eating, you get to listen to the company presentation, and you can ask the CEO right there any questions you have about the company. And one of the things that's really cool about this is you get to meet all the greats. You get to meet Rick Rule and talk to him as much as you want, of course. Jim Rickards, Danielle DiMartino Booth. I would love to see you guys there, meet you face to face. Now, remember, only the companies that are in Rick's portfolio are invited. So last year, I was talking to the ladies that helped Rick organize this for him, and they said it's the easiest convention to organize for all the booths and the companies. Because when the companies call to see if they can attend, they simply look at the list that Rick gave them, and if they didn't make the cut and they're not in his portfolio, they can't come. It's done. All right? Pretty cool. That means it's like they're already vetted for us, right? You deserve this. Think of this as like self-care. This is like 4 spa days in a row for your mind and for your portfolio. And I like to play a little game when I go to these conventions, and it is, what bets can I place that will more than pay for the trip? So if you can't attend live, there is a live stream that you can enjoy from the comfort of your own home that is much cheaper. It's not quite as fun, but it is still pretty cool. And, that's what I did before I started going to all these conventions, that I would just do all the live streams. So link is down below. I would love to see you there and meet you face to face and put a face to all the avatars and screen names that I've been looking at for years. That'd be pretty cool. All right, and oil, WTI is up 1.6% for the week. Brent is up 0.1% for the week. And gold divided by crude oil is, gold underperformed by 6.2% for the week. So last week, it took 55 barrels of oil to buy 1 ounce of gold. Now it takes 51 barrels of oil to buy 1 ounce of gold. XLE is up 3.7% for the week. So shot up, kind of gapped up here on Monday. And ERY, so we got this one from Christopher Mullen. Basically what I'm looking for is it to come up here and touch this 65 level so that I can run a put or run a short or basically bet ERY a 2x inverse on oil and try to make a little money from it. And I almost got there. It got up to the 50-day moving average. I mean, I guess if I was like Johnny on the spot, I would have known right there. But yeah, even looking at this, I don't really see how you would know that. I mean, nothing really shows me in the technicals here that it was going to come down like that. But anyways, I think the $65, $66 level, somewhere in there, I'll be watching this. And if I see something, then I'll run a quick, try to make some quick money on it, and I'll do it through ERY here, like Chris's suggestion. All right, and XOM is up 8% for the week. So I like the 103 level quite a bit. I think there's quite a bit of support around right there, like 103, 103.50, somewhere in that ballpark. I like cheaper than that, even better. 96 would be amazing, although it's probably not going to get there. And Chevron is up 2.6% for the week. Still like the 135.50 level quite a bit. And CNQ, so Canadian Natural Resources, is up 0.6% for the week. Still in a downtrend, kind of hit the 200-day moving average there and then shot back down. I wonder how much. Oh, I just thought of something here. Oh, yeah, we could do that all day long. I was looking at options. I'm like, wow, if you could take an option right there, like look at this day on Wednesday. I mean, zooming in on this bar, like if you were on it at the end of the day on Wednesday, that would be a really nice put. We have the volume here for it, 4 million shares, $60 billion company. That'd be kind of cool. Anyways, yeah, I'll have to look at that, see what happens. Okay, Blackstone Minerals down 0.5% for the week. So coming into a Fibonacci rate here on the 618. If you buy it at $14 a share, you get over a 10% dividend. Sounds too good to be true. They did have a really bad earnings call, so that's not fantastic. As long as we got weak oil prices, we're probably going to see some weakness in this stock, but it pays a great dividend. So about $13.50 would be around the 618 level, so that's kind of where I'd be looking to place a second bet. And natural gas is down 12.2% for the week. So hitting on a Fibonacci rate here. Oh, I got to draw it. After a while, you can kind of see these things without really. Okay, so right there, like right in the 50% mark. I'd like to see it come down to the 618, and then that would kind of line up with this 200-day moving average to catch it. So that might be kind of a tradable moment for you guys that trade natural gas. And Animal says, it's funny that you had Mining Stock Monkey and Christopher Mullet on last week because you, Rick Rule, and those two guys are my go-to references when it comes to the markets. Well, thank you. I appreciate that. They are mine as well. And yeah, I like that. If you guys missed our episode with Jordan, Mining Stock Monkey, he gave out a special discount for his newsletter, which is my favorite newsletter. It was a 10% discount. It was offered to 75 people, and I talked to him a bit ago, and 67 spots were filled. So maybe there's a couple spots left, maybe not. But check out our episodes with Jordan, and his discount link will be in the pinned comment. All right, Devon Energy is up 2.2% for the week. So kind of went up as expected, got a little bit more upside. I don't see any buys right here, but I like that it's above the 50-day moving average. We got the shorter moving averages moving above it here. Don't really see any tradable patterns, but we got a lot of support right where we are now. So that's looking good for Devon. Still a little more room to run on the technicals here. And Birchcliff Energy is up 4.6% for the week. Don't see any buys here. We got some resistance up here at the recent highs at $4.85. And Pado is down 0.6% for the week. Don't see any buys here either. Had a nice little run up on Monday of last week. Got all the way up to, what is that, $14.52. So pretty cool. But yeah, I don't see any buys anywhere near where we are now. We gotta let some of this, some of these technicals get worn off a little bit and kind of shed back down. And coal, thermal coal down 2.3% for the week, so at the lower end of the range, around $100. And met coal is up 0.3% and in the middle part of the range here at 189. And our favorite coal ETF, ironically spelled out COAL, don't really see any buys right here. I do like that the 50-day moving average is hitting it. Still got about 15 million assets under management. We had another 300K come into the fund with the same amount of shares, so that's good. And Glencore is up 5.7% for the week. So we had a retracement here that we talked about before. I don't know that it was really tradable because it never came in for a double bottom, but that's okay. Got our stink bid in down there around $6 and we're in it for the ride. Is hitting some resistance here at the 50-day moving average. So I would expect this will probably correct a little bit next week. AMR is up, is that right? 10.6% last week? Yeah, okay, 10.6%. Okay. AMR up and now above the 50-day moving average. So that is nice. Hopefully we got some, hopefully we'll get a little wind in our sales in AMR here. And BTU is up 2.9% for the week. Still waiting on a tradable pattern so I can trade this thing. I just don't see any patterns right here. I was kind of hoping for a little bit of a sell-off here when the dividend came in, and nothing drastic that was tradable. All right, platinum is down 1.1% for the week. So $900 is basically your mark. I like $900 as an entry. PPLT, this is straight up platinum on the stock market. So I like a starter position at 85, then 83, and then $80. And Palladium, same thing. $900 looks good. And way to play it on the stock market, PALL, starter position 85, then 83, and then $80. And SPPP is down 1.1% for the week. So I like the limit order at $99 and $8.75. Yeah, that's where I see it. Oh, Jordan brought up a really good point last week in that PFIC, passive foreign investment company. So a lot of these ones that I brought up here, and I'm not a tax guy. Talk to your accountant or your tax guy to get the skinny on this. But a lot of these funds, if you don't have them in like a Roth IRA account or some like tax protected account, you could have a massive run on some of these. And this just made me think of it here because he mentioned the SPPP. Like you could have a massive run on this thing. And if it's not in a tax protected account, you may have to give the government almost all of your gains. And your reward for being so smart and for doubling your money is you have to give it all to the government. So take a look. We haven't had a run yet in platinum or palladium. And if you're playing this only through SPPP and you're an American and you have this only in your brokerage account, it is well worth it to just sell it and take a small loss or a small gain or break even and then immediately buy it in your Roth IRA so that you can keep all the gains, right? Okay, food for thought. Just had to get that out. I wanted to make sure I said that. Okay, and platinum divided by silver, still historically cheap. You could trade 1 kilo of silver for 1 ounce of platinum, which is very, very unlike history. And I'll zoom out here to show it like I do every time. Eventually, we will look like a genius, just not now. And platinum divided by gold, starting to finally tick up. This zoomed out, you can't quite see it. But if I go in on the daily here, look at that. If we finally put in a bottom, I don't know. I mean, this could be a little blip like that, but I'd like to think so. I'm literally betting on it. 3 ounces of platinum for 1 ounce of gold. When have you ever been able to do that? All right, nickel futures is down 1.2% for the week. So basically flat for the week. We're still above 15K, which is good. And NIKL is up 3.5% for the week. I don't think this was a bottom. I feel like we're probably maybe not hit down at that level, but come down pretty close to it. I feel like we got another correction coming. We got high technicals here. Nickel's still hated. I think we got some more downside. We'll see. And Centaurus Metals down 2% for the week. So here's another one that's another PFIC. So if this isn't protected in like, one of your tax protected accounts, you could be very right on this and have to pay Uncle Sam for being so smart. Anyways, I like buys down here on the lower part of this parallel channel, which is pretty much where we are now, maybe around 22 cents. And the Bloomberg is down 1.75% for the week. So maybe a fib retracement right here. What I'm kind of liking on this one right here is right on the 200-day moving average. hits in between the 38.6, 38.2 and the 50% retracement on a rising 200-day moving average. I kind of like that quite a bit right there. I think that could be a little sweet spot. Iron ore is still in the middle of the range, trading at $100, up 1.6% for the week. And BHP, bull flag played out on Monday perfectly, shot right up. So we can delete that. And there we go. Shot right up, got above our white line right there. Kind of high technical, so there's no buys right now. But yeah, like this one a lot. And Rio Tinto up 4.4% for the week. So the pennant did play out on this one. I drew the circle down here. It's like that's where you want to be buying. We can get rid of this pennant now. And yeah, I don't see any buys. I like the buy down there at $52 when we talked about it. And since then, you've had quite a run. Let's do a little like compare and contrast here. So you're up about 20% since you bought it at 52. And if we want to see what the breakout would look like here from a pennant, if this pennant actually plays out, it could run up to almost $70, and that might line up quite nicely with this downward channel trend line. So just that gives you an idea of kind of where to take profits. You know, like maybe you trim a little bit now because you were right. You bought it at 52, and you know now you're up 20%, and then you ride the rest of the position out until it gets up to this trend line. You know, or you just hang on to the darn thing forever because it pays a great dividend. Choice is yours. The PIC ETF up 3.3% for the week. So this one also had a bull flag that played out. Like this one a lot. So you had both your limit orders in there hit the 33 and the 30 way down below. Shot right up. You were up quite a bit. What is that? That's going to be about 20% as well. Yep. And if you were to project that up the breakout, that would take you up to about 41. And Bitcoin, this one's been kind of exciting. So this one's had some massive moves here. So we were down at like, 74,000, like 5 weeks ago. And we've just had some massive up days, mostly trading sideways and then just massive moves. And it's just kind of this series of a bunch of little like flags here, right? I mean, not perfect, but they just keep playing out. Now we are getting really high technicals, and let me zoom in here on the RSI and show you something. See how it shot way up, so it got RSI overbought 76, and then see how it moved down below this yellow line. So I think we might be getting a little bit of consolidation here on Bitcoin, and also take a look here at the MACD. So see how it's just starting to turn down below. We're starting to get some red in the histogram here. If I had to guess, it looks like it's probably going to move down more than up, but we're almost to all-time highs at 109. So I don't know. This might be like a pocket queens versus ace king scenario again. If this is a bull flag here, so we'll draw this out, something like that, right? And then we do a target on it, and we could do from here, we basically take the pole up to the top, right? And then we would take where the breakout would happen and string it up. If I go here and there, and we get it right about 112. So a little bit higher than all-time highs. I don't know. I could go either way on this one. High technicals that look like they're rolling over, but a pretty bullish looking pattern in the price action. I could go either way. Flip a coin, 50-50, I don't know. Thank you guys for being here. Be sure to sign up for the free newsletter and check out the Rule Classroom and the Rule Classroom Plus. I will be doing some charting on Monday, and we'll be bringing up some of the companies that are going to be at the symposium this year. So be sure to check that out. And thank you for tuning in. Go to stevebartonmoney.com for more, and have a wonderful day.